Good morning. It is early March and happy days are here again. The stock market is near all-time highs, and it seems that all the volatility we've experienced in December is now a thing of the past. The headlines about trade wars, about the deficit, dysfunction in US government, or the Fed have all disappeared magically from the news, proving once again that price action leads the news, and reporters just try to hopelessly explain what is really happening in the financial world. The truth is, none of these issues have gone away. They have simply stopped fitting the prevailing narrative because the stock market has rebounded so sharply. So where are we really in the macro cycle and the economy, and what's next for markets? At LRT, we're not macro investors, and we don't pretend to have a crystal ball and know exactly what's going to happen. However, we believe the most important factor to look at is the term structure of US interest rates, often referred to as the yield curve. And historically, when the yield curve is flat or inverted, as it is right now, a US recession or very sharp slowdown in economic growth was imminent. It was going to happen around 12 to 18 months after the yield curve initially inverts. That suggests to us that a very sharp slowdown in US GDP is coming sometime in 2020. Now, because the stock market is always forward-looking, we expect the US stock market to lead the underlying economic events by 6 to 9 months. Therefore, we expect some kind of bear market or sharp turbulence in the US markets sometime later this year. I think the heightened volatility that we've experienced over the last few months is here to stay. And the heightened volatility we've had highlights the need to have a clear and well-defined investment process. Because without a well-defined investment process, you're likely to be caught up by emotions and trade in a way that's inconsistent with trying to achieve your long-term goals of protecting capital and portfolio performance. At LRT, we remain clear and disciplined and committed to our investment process. And I believe times like this, times of heightened uncertainty, heightened risk, bear repeating what our investment process is. First, we're trying to identify global companies that have strong and growing competitive advantages, that have the ability to grow and reinvest capital, and that are led by capable management teams that understand and excel at capital allocation. Once we've identified these companies, we seek to buy them at attractive valuations. And third, we sit and patiently wait without tinkering with the portfolio or being led astray by emotions. And it is this process that we're using in these times of volatility and uncertainty. I believe we're very close to the end of the US macroeconomic expansion and relatively close to a beginning of a bear market and a recession. This is not a time to reach for extra risk. This is not a time to seek out complex or overly clever investment strategies. Simple, fundamental, basic analytical work like the type we do at LRT is likely to stand the test of time and the next bear market. So with that, I'd love to hear from you and discuss in more detail how we're positioning the portfolio and how our investment strategy is going to help us protect capital and generate portfolio performance in these times of heightened uncertainty and heightened risk. Thank you, and I look forward to hearing from you.